Okay, everyone, hopefully you've had a good week. It's been another big week here at Future Accounting. Plenty of tax planning underway, which is great. Good time to catch up, meet and implement strategies before the end of the financial year, which isn't too far away now. Many of our clients, or many of you out there, are starting to feel the impact of supply shortages linked to the Middle East conflict. And that combined with interest rates going up, it's a really challenging environment out there at the moment. And it looks like it's going to continue for some time, which is quite concerning. And it just goes to show too that rising interest rates in this context highlights just how blunt this interest rate tool really is. It's a primary lever the RBA has when inflation rises, but I guess it really does ask the question, does it make sense in this scenario? What we're seeing with the inflation rate isn't driven by excess consumer demand. It's a structural issue. Energy costs, supply chains, logistics and global instability are pushing prices higher across the board. Yet interest rates remain the only response at the moment. That may slow parts of the economy, which is what they're designed to do, but it doesn't address the root cause of what's actually going on. In many cases, it places the greatest pressure on those already doing it tough, the small businesses, farmers and farming families out there. And you just start thinking we need a more precision policy in this day and age, more targeted thinking, better tools for a modern economy. There's also a broader conversation to be had around energy policy. I think it's sort of starting to get to the stage, we're seeing it with our clients. And we wrote about this back in February that energy, as we all know, flows through everything that we do, whether you're a manufacturer, whether you've got an office building, whatever the case may be, we all use energy. And energy costs going up impact absolutely everything. So you sort of start thinking, and we know that the government policy settings around this are having a real impact on everyday business costs. So more than ever, it comes back to controlling what we can within our businesses and making smart decisions where we can within our own businesses. So just with our newsletter articles today, there's a few key updates and planning opportunities to keep on your radar this week. The AML changes from the 1st of July 2026. Now this relates to the new anti-money laundering laws. And basically what it really means is that we're going to be asking you for a lot more compliance information, which is quite frustrating, but just what we've got to do to comply with these new rules. There's another article there on the $20,000 instant asset write-off. So have a look at that. And importantly, there's examples in there in relation to trade-ins, because this is sometimes overlooked in these transactions, but because typically your equipment is all written off, anything that you do trade in will be profit. So, when there's a changeover occurring, we do look at the changeover prices, the new price and the trading price to try and get the best outcome. Be mindful that the 12th of May is budget night. So just make sure that, there can be changes on the 12th of May that are immediate. There's also a third article on financial literacy for children. So have a look at that. Something to have a think about, and just the taxation implications of that investment on behalf of children. As always, if there's any questions that arise out of these articles, just yell out. And look, just have a great weekend. We'll catch up next week. Thank you.